Hey, welcome back to Tilton Talks Crypto. Had a special guest here, Martin Tillier. Martin has a fascinating story.
Nice.
When I heard it, one, I was like, man, I wish that was me. Two, I said, man, I'm glad that wasn't me. Right? The perspective that you gained from that experience was amazing. We're going to get to that in a second. Just to remind everybody that we're giving away $50 of SMTF. So what you got to do is basically go to the platform, get verified on the portal, and leave a comment about this week's episode or a question, and then we're going to pick a winner every week about the $50 of SMTF. And I think this week it went to Caddy, and I don't have it. I think that's her username, and they'll notify her. Yeah, it looks like Caddy won. So congratulations to her. And there's a question. I'll read that at the end of the podcast. But let's get into Martin's experience and a little bit of introduction about Martin and who he is. So Martin has been around the markets and at Forex and a few other markets for 40 some odd years. You currently write a column for NASDAQ.
Yes, I do.
And he was back in the 90s, was a Forex trader for one of the largest Forex brokerages. And that's where his experience, his story about Black Wednesday came from. And I'm going to talk a little bit more about that, but also, I mean, he's got a load of experience, but there are a couple other things, maybe from your personal story perspective. You were personally impacted by 9/11.
Yeah, I was. That kind of what brought me to the States, you know.
Yeah.
Unfortunately, my brother-in-law, my wife's brother, works for Cantor Fitzgerald and died on that day in attacks on the World Trade Center. At that time, and we'll get into the kind of journey that got me there at some point, but at that time I was living and working in Warsaw, in Poland, and I and my wife had her own business that she'd started that was going really well, that she was running, you know. And when that happened, we just stopped and left. And we didn't feel we had any choice, you know. Her family was just her and her brother and her mom and dad. Her brother had no wife or kids in the way, thankfully, I guess you could say now. And we just decided that we needed to be with her folks. So yeah. I quit. She sold her business and we moved to the States. By the time we got it all organized, it was early in 2022, in 2002, I mean. But we came on a wing and a prayer. We came with like just faith that if we did the right thing, things would work out. And we came with no job, no house, two kids, one of whom was born in January of that year of 2002, yeah. So just a few weeks old. And we just came, and it did work out, you know. I don't want to get too philosophical here about everything, but in a way, for those of you who face those kind of life decisions, you know, the only thing I can say to you is do the right thing, and whether you believe it's God, fate, karma, whatever, yeah. Things kind of work out, you know. And I ended up where I'm at, and I'm quite happy with that. So
yeah, and you know, I'm very much believe that way as well. I believe that when you do what's right, I personally believe in God, and I believe that He kind of watches out for you and takes care of things, right? And it's not always easy when you're staring into the abyss, you know, of some life choice. Having that belief for me has been critical, and it's also a little bit of why, you know, we like doing the Smart Fi Crypto for Good. We just go and do what's right.
I was thinking that too. That's one of the things that attracted me to the company when I first, you know, got on board, and we're going to get more into that later, where that came from. But yeah, it's that, you know, I you know, as I said, whether you call it God, karma, fate, whatever, there is a reciprocity to life, and when you do the right thing, when you do good by others, things tend to come back to you. And I, you know, Smart Fi embraces that, understands that, embraces it. And the Crypto for Good program and the accent on just random acts of kindness and philanthropy that the company has intrigued me as well. It's quite rare in the space. It's quite rare in the corporate world, full stop, to be such an essential part of what a company and a community is. So I like that about it.
Yeah, well, I appreciate that. So let's dive right into Black Wednesday and this experience. It was when you told me the story, I was fascinated, and then also kind of your experience, and this is why we ask people to tune into the podcast when they're trying to get an experience or perspective that'll help them in their financial lives. And this is a major one. This was a massive, dislocation in the market, all these crazy things that happened during this time frame, and it informed you certainly about what you're doing now, what you do for NASDAQ and going along, but I'll let you take it away from there, and you can kind of tell people what happened. What is this?
I actually thought that was me on that role, on that BBC thing. There's a guy doing that. So basically what happened was, to cut a long story short, the Bank of England had been supporting the pound sterling for a long time. They had been trying to keep it within the bands of what was called the ERM, the suitable acronym, because nobody quite knew what it was. It was the exchange rate mechanism that basically was supposed to be a precursor to the euro. A lot of detail that you don't need. Basically, all you need to know is that the Bank of England was paying 277.30 for sterling mark forever, right? That was the bottom of the preset range. And we'd been hovering around there for a while.
They were supporting the price, trying to keep it from free floating.
Yeah, trying to keep it from dropping. And what the root of the problem was that when the ERM was designed, there was a political move in the UK to put the pound in artificially high. It didn't reflect the reality. At that time, British inflation was somewhere in about 3 times what it was in Germany. There were all sorts of economic problems, but they wanted to kind of, this kind of weird national pride thing. Let's put it in there nice and high, and obviously that was unsustainable from a market perspective. But back then, you have to understand that even more so than now, free markets, certainly in Forex, were new and not necessarily considered to be powerful. I mean, we'd had the Bretton Woods Agreement up until maybe 20 years before that.
1972.
Yeah, 1972, and that was basically restricted the free flow of money between nations, and therefore the prices of the relative price of currencies. So again, I don't want to get too far into the weeds of how it happened. All you need to know is the Bank of England. We had a direct line from in the dealing room that I was in. We had a direct line to the Bank of England, which means we
tell me a little bit about when you're talking about what you were doing, your direct line. The brokerage. Tell them a little bit about this. The brokerage and what was going on there, what you were doing.
So the role of a Forex broker, as I was, has basically been supplanted by computers now. But what we did was we sat at a desk with a bunch of squawk boxes surrounding us, maybe 12 to 15, depending on the individual.
You say squawk box? It's just like an intercom.
Yeah, it was an open mic system on our end, but it's a two-way communications box, and so they can the people, and each one of those represented a bank or a major financial institution of some kind. They could speak to us directly, and everything we said on our open mic, we couldn't shut it off. So everything we said went to them. So we were like basically where we were was basically the exchange floor, if you like, for Forex. Yeah. But there were multiple ones of those with different individual corporations. So our job was trading,
basically making markets and trading Forex.
Yeah. So we were basically making markets and we were like kind of the middlemen, but we were where the action was, and so as a result, we spoke to these big banks and everything. And one of the banks that we happened to have on in our place, which not everybody did, was the Bank of England, right? And obviously that was a major one at the time because, as I said, for a couple of years, 30, I had to look up the big figure, as we would have said, the 277 part of this, because it was just 30 to me. And I remember it as vividly as 30. But the Bank of England had been paying at that level for a long time, and they were about the only buyer there, right? Everybody else was trying to sell, and the Bank of England was just sitting there and saying, no, you shall not pass. It will not go below this. Yeah. And it was actually pretty effective because everybody knew they were there. And then gradually over time, people started to think, hold on, this is unsustainable. And the market, this was, to me, was the day when free markets kind of grew up a bit and began to realize that actually they were more powerful than central banks and governments. And so, you know, George Soros later took credit for it. Great marketing move. Cannot possibly be true that he alone broke the Bank of England. It just doesn't work that way. It was a free market that broke the Bank of England, right? He was a part of it, but he wasn't the reason. Great, as I said, great marketing move to say, hey, that was me, which we could all have said at the time. But what happened was, so every day we would, you know, so you have to understand at that time, my average daily turnover, even before the Black Wednesday itself that day, was $200 to $300 million a day, something like that. So, so the amounts going through were pretty large, right? On that day itself, in the run up to the big event, I probably turned over 20 times that, 4, 5, 6 billion personally. And so, and there's 15 of us sitting around the desk. So for George Soros to say his 10 billion actually moved it, you can imagine it's not.
Yeah, it just, the math doesn't add up. But
no, whatever number he put on it. But anyway, that's so we've got used to this, always having this bid there. If you can imagine, you know, from a like a trader's perspective, when you've got a central bank that is the bid, you know, they're not going anywhere. They have, in your eyes, almost limitless funds to throw at this thing. It doesn't matter, you know, how much you give them. And so we kept selling to them, you know, and they were always there. On this particular day, it was a Wednesday, September 16th, 1992, and almost exactly 30 years ago, if you think about it. Around about 4 o'clock every day, what would happen is the Bank of England's trading desk would close. They would actually come onto that line and say to people, say to everybody, just generally across our dealing room, you know, okay, we are no longer, we don't, you know, we are passing our order to the Federal Reserve Bank, who will pass it to the Bank of Japan, who will pass it back to us. It will go around the globe, but it is no longer our direct responsibility. Please speak to the Fed, right? And so that was the normal thing at 4 o'clock every single day, right? This particular day, instead of that, at 4 o'clock, there came just 3 words from the box, just 3 words.
What was, yeah, so this phrase is so important. This is like the, you know, this is the crescendo, the aha moment from what they said the day before to what they said on this.
Remember what they've been saying every day for I think it was nearly 2 years at that point, right? And every day they've been saying the same thing. And then this one day.
What would they, and what was that phrase they were saying that was the good, normal phrase?
What was saying, you know, my bid's been passed around the world, basically.
Yeah.
My bid's been passed around, right? Meaning everybody's got it, right? And that was just letting us know. Yeah. That was just letting us know that we needed to, if we wanted to sell to the Bank of England after that, we didn't do it direct to the Bank of England. We did it via our New York link and we did it to the Fed, right? So that was fine. We all knew that's what happened every day for 2 years. And then this one day at 4 o'clock, and we always went a little bit quiet around about that time just to hear that announcement. You know, we went a little bit quiet, and instead of that came 3 words: I don't pay. Now, in Forex terms, that means quite a bit anyway, because that means my bid is no longer there, right? You know, I've withdrawn it from you. I don't pay. But when the Bank of England,
say that one more time. It was when you heard
I don't pay.
Yeah,
just 3 words. Just 3.
And that was coming from the Central Bank of England.
Yeah, from the dealer, from the trading desk at the Bank of England.
Yeah.
All of a sudden, it was like it was one of those moments when time slowed down, if you like, but there was a shocked silence that lasted, it seems to me at the time, like 2 hours, but it was probably, you know, realistically like 10 seconds, which in a Forex dealing room is a huge amount of time, right? It's, you know, that's 5 trades, you know, and so we're sitting there, everybody's sitting there just stunned. They didn't know what they'd heard. And all of a sudden, we kind of moved into action. You know, you saw that footage earlier that was running there, guys running from one place to another. It was like that. But my first thought was, oh, shit, if you forgive the language, right? But my second thought was like, okay, are we long anywhere? If so, we need to get out of it, and we need to get short as quickly as we can. Yeah. So before we broadcast to the world, this was how weird, this was how corrupt, if you like, the Forex market was at the time. Before we broadcast to the world that the Bank of England had just pulled their bid. And bear in mind the fact at this time, the 15 people sitting around our desk were the only people that knew. Right? It was up to us to relay that information to the market. So we found bids for stuff, got out of our long positions, everybody got short.
Yeah, you started engineering the rapid risk off movement that you need.
Yeah, exactly. And then positioning for what we now knew was to come. And then we told everybody we don't pay 30, and everybody knew what that meant. That meant the Bank of England didn't pay, and then all hell broke loose. And we went the market went absolutely crazy. If we talk about volatility in the context of crypto, we talk about volatility when people see it in the stock market, or whatever. You've never seen vol like this. This was because nobody knew what it meant, right? Not just for the previous 2 years of the European rate mechanism, but since 1972 and the demise of the Bretton Woods Agreement, central banks had ruled. Right? They had told us all where we were allowed to trade in one way or another. They would come into the market and get out and leave us all flummoxed. But there was a structure to it. We knew what that structure was. We knew what their intervention meant and when it might end and this, that, and the other. All of a sudden, we knew nothing. Right? We didn't know what the actual value of the pound was because it had been distorted for so long. Right? Where do we go now? Everybody felt the same way. The thing dropped out of bed. It bounced around for a while, which amazed me. It didn't just keep on going lower because people thought, well, it's fallen, X%. It must be.
It's got to hit the bottom. Let's buy.
Let's find a bottom, right? There was no freaking bottom. This thing just kept on falling, right? And I ended up staying there through that night, through the next day, through the next night, through the day after that. So basically, my day started on Wednesday morning.
And what was your hourly volume at that point? You were doing, maybe before that as a run up. It
wasn't as big at that point as it was when the Bank of England was on the bid, because bear in mind the fact that, in order to trade, you need two sides to a trade. You need a buyer and a seller.
The other side.
And there were no buyers, until we reached a certain point, and then it bounced around a bit, and then it started dropping again because people realized, hey, there doesn't have to be a bottom to this at all, right? So the volume wasn't massive, but what happened was the gaps between trades just grew exponentially. So usually in Forex, you jump in and out of stuff. You might make, a pip or two on a trade. It's 1 or 2 hundredths of a penny in the exchange rate or whatever. Yeah. And you
really tight. Yeah.
And you jump in and out. During relatively busy times before this, I would trade 5 or 6 times a minute. So about once every 10 or 12 seconds on average, and just jump in and out of stuff. Those trades were gone because there wasn't the liquidity to do it, right? The market just turned massively illiquid very quickly.
Yeah.
Right? Get to draw this back to where we want to go. I know it's kind of, everybody always loves the fly on the wall stuff. I was there, front row seat. Actually, one of my
it's like being there watching the nuclear bomb go off at Hiroshima, right?
In a financial sense, it was kind of like that. Yeah, one of my accounts was actually Goldman Sachs, London, and Goldman was where Soros was directing most of his stuff through. And the guy there, Mike, who I still kind of in touch with, was a friend as well as a customer, if you like, or a client. Yeah. And he just kept on coming to me and saying, "This is unreal, man. This is going to go. This is going to go all the way through that day," because he was seeing the volume of stuff that was going through, And so we kind of knew it was coming, but we didn't believe it was ever going to actually happen. And when we heard those words, "I don't pay," it all became real. And everything hit the fan. So we ended up, like most people on the inside, making a ton of money on that day. But here's where let's tie it back to crypto and over that 3-day period, I should say. Let's tie it back to crypto and to SmartFi, because that's kind of what we're talking about here, right? So what did that teach me, right? Number one, it taught me that I could actually go 3 days without sleep, and if I had enough coffee, I'd still survive, right?
A little bit of food and water, yeah.
Yeah, that's right. Yeah. Number two, it taught me the value of peeing in the bottle on the same process. But also, what it taught me was that a couple of things. Free markets are king, right? Governments, central banks, whatever, believe that they can control markets. They can't. Ultimately, when they get things, when they're wrong, they can't, right? Where does that take me? So that took me to, fast forward a few years, 2014, I'm writing a daily column for NASDAQ, and this thing called Bitcoin comes to my attention, which is all new and fascinating, and the whole concept of crypto. And I thought back to those days. I thought, you know what? I knew then. Oh, sorry. I knew then that markets had their own dynamic. That a currency market that was handed back to the people, that was free of central bank and government intervention, was not just a viable thing; it was a necessary thing. And Bitcoin offered the prospect of that at the time. So that's what kind of got me interested back then in 2014. And I started writing positive articles about it on NASDAQ, which at the time was a lot more controversial and rare than it sounds now. And I know it was only 8 years ago, but
that's a long time ago. And the markets for Bitcoin were just starting. I wouldn't even say mature, but it was, there were a few places where you could go and buy and sell it, a few things, but it was still relatively new, really new.
I would literally, when I wrote positive things about Bitcoin, I would literally, in the comments section, which they had at the time, and they've since abandoned, I would receive death threats and stuff. I mean, people were just crazy in their polarity about their views of it. But anyway, it was fun. It was interesting to me, but it was on this deep philosophical level that I could see that it was needed, right? And so
I want to make a comment about that too, because Bank of America, and we on some other podcasts we highlighted this, that the current market situation, Bank of America is basically their comment about, they characterized this market in terms of private equities traded by households, that 52% of all stocks, equities in the stock market are owned by households, not by investment banks, and they call them the placid gorilla, right? And so this same kind of concept that as things become more disintermediated and decentralized, and the average person has access to this type of an instrument, right? That they start to move the market. You have the GameStop and Reddit phenomenon, right? With that thing where they went against the hedge funds and stuff. But so that I would kind of equate that as kind of a similar observation to now you're talking about, hey, this thing disintermediates payments.
Yeah, absolutely. Right? And that's, so that was kind of like the genesis of my interest in crypto. And that was, in itself, you can trace a direct line from that experience of Black Wednesday, the chaos that I saw when, as a result almost of an artificial attempt by a government and or a central bank to control a market. And you can trace a direct line from that experience to being an early pro-Bitcoin person. And then from there, you can trace a direct line to where I am now.
Yeah.
Here with you and my involvement in SmartFi. Right?
Yeah. And so let me just kind of, again, for everybody, you moved to the U.S., came here, started writing for NASDAQ.
And after doing a bunch of other things too.
A bunch of stuff that in between there. Obviously, we were talking about trying to encapsulate the last 22 years or whatever that was from when you moved, during 9/11. But that view that you were writing about at NASDAQ in 2014 about Bitcoin was informed by this experience that you had, roughly 15 years earlier, Black Wednesday or whatever the time frame was. Yeah.
And in that, I was going to say, in that, then I took that then and came forward to, fast forward to this year, and a friend of a friend contacted me and said, hey, our mutual friend gave me your name because I know that you've been writing for a while. I've checked out your writing. We need some people to provide content, or somebody to provide content. Would you be interested in coming to work for us, do some research and provide some content for them? So I checked out the company, and it was kind of a negotiation. So I'm not going to declare my love immediately. But as I got deeper into who SmartFi was, what it stood for, the way they operated, the more keen I was to actually take the job, because it wasn't a job for that. At that point for me, it didn't become a job. It became a passion very, very quickly. And why? Because SmartFi is different. Lots of companies claim to be different, but believe me, I've been in and around market. Lots of people in and on the edge of markets claim to be different, right? Because I've been in markets, front end, back end, every single which way, but I've fundamentally made a living out of them for 40 years. So I know what different is, right? And SmartFi is different. They have a different approach that involves taking the best of the whole DeFi thing that I was talking about, but then giving it a real world application, because in order for the benefits of crypto and blockchain technology to be actually felt in the economy as it exists, you have to incorporate some kind of centralized finance protocols and things. All right. This is not just like you can be as ideological as you like. You can be as realistic as you like, as I was, based on experience of what happens when markets are distorted. But if you were to turn that into real world opportunity, not just for yourself, not just for the company, but for other people, then you have to find a way to transfer those benefits into the existing system. And that's what SmartFi does. When you buy the SMTF token, that money goes direct to fund small business loans. In effect, your money goes back into the community that you live and work and operate in, right? That in itself is kind of revolutionary for the crypto industry these days. That is different, right? Again,
it doesn't just go into some trading algorithm that is a zero-sum trade swap that doesn't create any real GDP in the effective world. That doesn't help anybody else.
It really doesn't. It goes to fund loans to small businesses. Now, again, where are they different? Not all of those loans are crypto loans with SmartFi. There's a diversification of the loan portfolio into other, I hate to say real world because it makes it sound like crypto isn't real, but what most people would regard as real world businesses. Yeah. Farms, tow truck operators, whatever, right? Construction companies.
Restaurant buying a stove or real estate or different things.
Yeah. And the advantage there, of course, is that that's an advantage for everybody because it's SmartFi loans are helping those businesses to operate and grow and everything else. But it's an advantage for anybody who buys the token and anybody who's part of the SmartFi community, because it means that the asset base that SmartFi is based on is diversified, right? This is kind of like So this is not supposed to be an infomercial. I'm just trying to explain how I got involved, right? But one of the things that my 40 years has given me is an appreciation of how markets operate and what is the best way to work in them. If you want to be a part of them.
Yeah, and that's kind of what the podcast there was about, how to take advantage of the market trends in cryptocurrencies, right? And kind of the mantra here for SmartFi is, if you want to become a day trader, go be a day trader. Awesome, great, fantastic. That's a whole different set of different things you can do that. But for the average person, and for crypto to make an impact in the average person's life, it cannot become a day trader. Everybody's not going to give up their job, go trade crypto, and do all these other things, right? There has to be that tie into the real world. And there have to be these broader macro trends to take advantage of, not micro technical, hourly trade analysis, those kind of things. That's not really what the average person can do or actually wants to do, right? So in this structure of SmartFi, what we talked about, these other things, we should talk a little bit about, okay, what does an average person do, right? We've in the past, we've talked about dollar cost averaging. We'll probably revisit that. But the design of the SmartFi token, the Smart Cycle, the commodity layer protocols, all these things that we developed both on our CeFi side and DeFi side come together to make this unified structure of what we think is a complete market, right? A complete ecosystem. Whereas where you have, when the variety of most things that are happening with Bitcoin, it's not being used to make payments, right? It's being used as an investment or to trade with or do something else. Its utility is kind of morphed into this just an investment speculative basis. And same with Ethereum, and there's some other things. Ethereum has some advantages, but maybe you could talk about, since your observations from 2014, what are you seeing now coming through as the next trends? Talk about maybe Bitcoin observations and Ethereum observations, and now going to like CDFi, the things that SmartFi is doing. Maybe you could talk about that.
Sure. So back in 2014, I remember writing an article when Bitcoin, BTC USD was at around about, I think at the time it was about $500.
Yeah.
And I wrote that I believed that everybody should have one for themselves, one for each person in their family, including their kids, and just hold on to it. And because I actually believed that, there was a chance that before too long, certainly within my lifetime and probably within the next 10 years, I think I wrote that this $500 Bitcoin that people were saying was worthless would be worth at least, I think I picked on the number $10,000 as some crazy amount that maybe it could be worth at some point. Yeah. And now we're all upset because it's dropped to 19 grand. Right?
Yeah.
But that was just so ridiculous to most people at the time. They couldn't see it. But there's an inherent there's a reason why that happens. And that hasn't gone away. Right. Yeah. The inherent reason for the growth in the value in the price of Bitcoin hasn't gone away. It's, everybody who's here, I'm sure, knows what I'm talking about here. There's a limited number of them. There will only ever be a limited number of them. They have and people say, well, they don't have, Bitcoin doesn't have a use. It doesn't have real world. People don't use it to transact. People this, that, and the other. It doesn't matter. Anything has a value because people assign a value to it, right? And that's true of Bitcoin the same as it's true of, the dollars in your pocket, right? Those pieces of green paper don't actually have any value, do they? I know that people say, well, they're backed by the full faith and credit of the United States government or whatever. Yeah, great. Thanks a lot. What does that mean? It's the same as saying Bitcoin is backed by math, right? It's the same kind of thing. It's like, yes, there's something behind it, but what gives it value, what influences the price is that people believe it has value, right?
Yeah. So the other day I was talking with, I won't name any names here, but this was the president of a banking association. And they are just now basically starting to come to the realization that the distributed ledger technology, blockchain, cryptography, the technologies behind cryptocurrencies have application for their bank or his group of banks that he represents. But also that, he kind of opened up the dirty little secret was nobody really understands USD. And he says, all of my banks, when you get dollars from somewhere, those dollars are actually not Federal Reserve dollars, right? They are such and such a bank's dollars. And it's a balance that they hold in those dollars. And it's just a ledger.
Yeah. And to go off topic just a little bit here, and I tend to do this. My brain works at tangents. It's the product of that ADHD approach that you have to deal with all the time. But one of the things that I tried to explain to people over the last, since 2010, so what's that, over the last 12 years, is that when we talk about QE, right? This is, just say such an aside. But when people talk about QE, quantitative easing by the Federal Reserve Bank or by other central banks, most people don't understand the mechanics of that, right? And I doubt you do either, Aaron, because most people don't even think about it, right? But fundamentally, here's what happens, right? Somebody sits in a room at the Fed, and they are told to go out and buy whatever, $1 billion of loans, package loans, right?
Yeah, they're buying a security. They're basically supplying value in the marketplace, pulling it in, trying to support the marketplace. Because they're buying assets, putting it on their balance sheet, the quantitative easing.
Most people get that, but what they don't get is the actual mechanics of how that happens. So this person sits there and calls up, let's say, Bank of America, because you mentioned them earlier, and says, "Hey, I need $1 billion of your 30-year mortgage package loans." And they say, "Okay, here's the price," and they say, "Okay, okay, I'll buy them." Right? So Bank of America then sets about transferring the ownership rights of those mortgages to the Bank of England, right? And the Bank of England pushes a button and creates $1 billion in the account at the Fed of Bank of America. That's what happens. Right? That money didn't exist at all before. It wasn't there. Nothing was there. They
just said,
"Here's your $1 billion."
Balance. Yeah.
Now your balance has just increased by $1 billion, right?
Yeah.
So think about that for a minute about what that means for the rest of us, right, who've got dollars in our pocket.
Yeah, and people wonder why inflation is rampant and all the other crazy things that have gone on, you know, all these things.
Anyway, sorry, that was a complete.
Yeah, no, I think it's important.
Fascinates me.
And what I'm trying to illustrate is that these are community local banks that this guy represents in terms of a banking association. And they are no big fans of, you know, again, this is probably why I'm not using real names to protect these people. They do not like the central bank, right? They don't like the Fed, because there's now talk of the Fed trying to compete with local banks with CBDCs, right? Central bank digital currency. And I keep looking over here because I want to talk about this slide here about this cycle. But long story short, more people are waking up over and over and over and over to this. The things that you experienced 40 years ago, you know, the other experiences that we've seen, the experiences that we had through crypto, through other banking, through energy. Our background is in energy. You know, we started this company over 15 years ago, and we saw things in the commodities market that's what informed us of the smart cycle and the commodity layer protocol, these unique cycles that we built into SmartFi that allow us to do these unique things and take advantage of these markets, right? But I want to show people that are watching this. This is a historical for Bitcoin, you know, and it's related to the halving, right? And how the halving plays a role in Bitcoin. A lot of people, you know, believe that they kind of understand this. We saw this playing out over and over and over because as a participant in the crypto markets, we started our participation actually at the network level, not on the retail side. We were helping massive miners to deploy assets to the Bitcoin network. And we had, at one point, one of our customers represented about 10% of the Bitcoin network mining. You know, they were mining roughly 180 Bitcoin a day. I mean, they were just cranking it out, right? And they're in China. And we watched these cycles come through when we started helping these guys fund certain things and do, you know, they were basically an integrated process. And I can't give too much detail about what was going on, but we watched Bitcoin go from $1,500 when we were getting involved in Bitcoin up to 20,000 roughly in about 8 months. You know, this was our first cycle going through this, you know, in 2017. And I was stunned. I was shocked, right? But just that same kind of shock and awe when it went up to 20,000 in December that we had, then it rapidly went to about 3,800. In fact, you know, it bounced even lower than that, but roughly went to about 3,800, and after about 6 months and stayed there for a long time. That's when the people who were involved in mining started realizing they needed help funding the cash flow, because effectively what had happened was I don't pay. It was the equivalent of I don't pay, right? But there was no central bank. And so we started lending against Bitcoin and kind of stepping in as like a lender, not really last resort, but somebody providing liquidity, right? We didn't have a directional position in Bitcoin. So we started seeing how we could come in and support the network, support the markets, do all these things with credit creation functions around this. So setting up this next bull cycle for what will take place, right? We've seen this over and over and over and over with Bitcoin during different periods of times. This next cycle, though, will be the first cycle where there wasn't easy money coming out of the Fed. You know, interest rates were, 1% or something like that. They're going to be higher. And the dollars are going to be harder to get. All of these other things are going to take place. So it'll be interesting to see what the effect has, because Bitcoin has now started to track securities markets, in trading in the stock market, right?
Yeah.
Before it was not doing that.
There's almost an inevitability to that, because one of the things that I learned in my time in dealing rooms is that, traders are sheep fundamentally. They will, they'll follow the herd wherever possible.
Capital is a coward.
There's always the stories of the very, very successful ones that stand against it. The Big Short story and whatever. These people who
the Michael Saylor view and all that stuff. Yeah.
Yeah, you take a contrarian view and stick to it and everything else. You hear those stories. What you don't hear is the stories of the people who try to do that and go bust, which happens much more frequently.
Crushed. Yeah.
And so just to apply that to, how individuals out there who are watching and listening, what does that mean for them in terms of their investment in crypto and their, how do they incorporate that knowledge and that information? Well, the first thing to do is to step back sometimes and take a look at, when you had that chart up here, ignore the noise and look at the trend, right? There is a very clear trend, and it goes from bottom left to top right, right? It's an upward trend. If you understand that and you can see volatility in it, then what happens is that volatility, those drops, become opportunities. They're not. See, somebody just posted the question. I just saw it come up. Yes, the Queen did die. I'm going to get to that in a minute. What a horrible way to do away with somebody's life. I just thought, just as an aside, like that in a conversation. But anyway, so to look at that trend, not at the noise within it, and the point is that we mentioned briefly dollar cost averaging before, which is where you decide to invest in something, and you at regular intervals, it can be weekly, daily, even monthly, quarterly, whatever, you purchase the same amount over a period of time to complete your investment. So if you want to put $1,000 into Bitcoin or SMTF or whatever, you do $250 a month for the next 4 months, right? And what that does is that basically smooths out all of that volatility, because you don't care where the market is, what the price is at any one time. You're not investing based on price, you're investing based on potential, right? You actually came up with a phrase. We came up with a thing the other day. You pointed out about gross domestic product, and I said, what it's called. We were talking about how the real world applications of SmartFi matter because that's the economy, and trading and speculation are not the economy. And I said, it's called gross domestic product, not gross domestic profit. Right?
I'm going to make a quick observation about that too, because when I was in Guatemala doing the Crypto for Good thing, right? When we talked about, hey, sometimes things just come around and you get rewarded for doing what's right. There was a epiphany that I had there, and we had already had this kind of, in the previous years when we were developing the models for SmartFi. We've been working on SmartFi and developing this now for years, but almost on our 6th year, right? But I had this moment where the driver who was driving us around in Guatemala, he asked what I did, and I was like, oh, I'm into crypto, and he's like, oh, kind of didn't know anything about that. And he said, so what's going on in the United States? And at that time, this was the end of June, 1st of July. The markets were melting down. It wasn't a very good time for me to be in Guatemala, but our guys handled all this stuff, and the way, because we're safe, we deal with all these things. But it was an epiphany, an illustration to me that he did not care what was going on, because he was going to get up the next day, go to work. He was going to do his thing. He didn't care what was happening with the markets. He was asking me, what that was saying. Does that affect you? And I was like, well, we have a lot of people it's going to affect me, and blah, 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 blah. We were going through this thing. But it was interesting that I had to go to Guatemala to learn that about crypto, right? And reinforce what our own models that we've designed to do. And this is when I was on the balcony in Guatemala talking and rehearsing that story about this guy. So going into the real world and having these real things about loans and with small businesses and all of these things that gives SmartFi this kind of unique advantage and safety in a way that when that market was coming off, all the loans that we had made into real estate or equipment loans, those guys were just fine. They weren't locked in some trade, some zero-sum trade that the market was coming unglued and it was going to wipe out their portfolio or something like that. Yeah. So this dollar cost averaging that you're talking about is a good way to do that, to get exposure to crypto and average it out over time, where you're not having to always constantly look at the markets and all of these things, right?
I was going to say, let's draw that back to people who might be watching and listening to their potential experience in their investment.
Yeah, maybe, Paul, our producer, Paul, can you pull up there it is. That's the slide I want to see right there.
Yeah.
Go ahead.
So, if you, what happens when you dollar cost average into anything? It's a stock investor's technique from a long time ago, right? It's not new. It's not crypto focused, but it's to deal with volatility, right? Because what happens is if you avoid buyer's remorse, you avoid the emotions that make you make wrong mistakes. The biggest enemy to any trader is emotion. When people think that dealing rooms are these places with all these people screaming and shouting, yes, they kind of are, because that's how we conducted business, right? I say to people, I shouted and waved my arms around for a living for a long time, right? But at the same time, the people who do it are so unemotional about what they do, right? It is a job, right? Yes, I sold 20 million and it went up. Oh shit, I cut it. I move on to the next trade. They don't get excited. They don't have huge ups. They don't have huge downs. They do their job, right? And as an individual investor, you need to replicate that. And so the best way you can replicate that and take the emotion out of it, when something that is volatile, is by dollar cost averaging in, right? That means that if you buy on day one, right, you make your first investment on day one and the price goes up, you go, oh, good, I bought some at the bottom, right? Tremendous. If it goes down, you say, oh, good, next time I'm going to be buying it lower. You can't lose, right? And so you're able to focus then on the real reason that you're buying. And the real reason you're buying, I don't want to keep you switching slides, Paul, so don't bother, but people will remember it, was that slide we saw, first of all, of the long-term trend of Bitcoin, right? And it's not just Bitcoin. It can be SMTF. It can be Ether. It can be anything. And it could be Tesla shares. I don't care. Well, the concept of dollar cost averaging works because it takes that emotion out of it.
Yeah, and I want to just tell people what's on that slide. It shows you basically that, if you dollar cost average the same amount of capital, and in this case, it was $100 a month for 5 years, right? From 2017 to reasonably this time frame now, instead of trying to buy, the dip, right? That's what dollar cost average is, DCA, and buy the dip is BTD. You can see what happened. The difference was, right? And there's another slide. We don't have to go into that, and we'll probably need to move on here in a second. But you can see that buying the average or dollar cost averaging, you'd have $18,000 worth of Bitcoin. But if you tried to buy the dip, you'd have 7,400 roughly, right? And that's kind of the difference, is that emotionally, people are trying to catch lightning in a bottle. They're trying to get this, hey, I bought it lower and then it went higher and all these other things. But it's the interval of time that emotionally gets people messed up, right? My brother-in-law bought Bitcoin at 50,000. He's hating it right now, right? Because he did the one thing that we teach people not to do. Don't go all in at the same time. Average, right? If you got a budget of your investment is $50,000 worth or whatever you got that is the money that you feel like you could lose and never affect your lifestyle, and that's what we teach people, then don't buy Bitcoin $50,000 on one day, right? Spread that up over a year or over whatever time frame that you think you ought to, and every weekend or every once a month or whatever your interval is that you're comfortable with, just buy regardless of what the price is.
Let me make one point here, because for me, with my background and what I'm talking about and where I'm coming from, I think it's important. Averaging is the best technique for investors. Right? For traders, it is terrible. Right? I hear it all the time. So I hear people who trade and say, well, people say things like, well, I bought it at 30, I must love it at 10, right? No, I liked it at 30, I must love it at 10, or whatever. There's another phrase for that can't be repeated in polite company, but that's such a dumb way of thinking. I hear retail traders say that kind of thing all the time. Well, I bought this and then it went down, so I bought some more because I thought it was even better value. Like, there is not a desk trader, an institutional trader in the world who thinks like that.
Would do that.
Because you're wrong. Why do you want to be wrong again? Why do you want to be wrong twice? If you buy something and it goes down, your fundamental base case for buying it was wrong. Right? Or it wouldn't have gone down. So accept that. You have to have that humility as a trader to say, okay, I got that wrong. Cut it, move on to the next trade. Right? because if you dig in and dig in and dig in, you end up as Nick Leeson, you end up as the London Whale, you end up as, you know, whoever the latest one is of these enormous blow ups in trading. So again, an aside, but if you're watching us as a trader rather than an investor, don't think that what we're giving you is an excuse to average trades. You know, we're not talking about investing for 10 years, 20 years time, 5 years time, not 5 minutes time.
Yeah, and the difference between an investor and a trader is when you take profit, right? And so a trader is looking to do that and generate P&L daily, hourly, minute to minute. You know, he's in and out, in and out, in and out. And so depending on their thesis and what they're doing, but an investor is a longer horizon, right? And that's when you use time to your advantage, not to your disadvantage. And so there's a big difference. And I know we can't spend much more time, but that's how you would take advantage of the market trends, is take a different approach. Don't become a day trader if you don't know how to day trade, or if you don't know how to really be a trader, right? Yeah. And we're going to be running out of time here. So let me make we got to jump. So if there's any more questions, put those in the chat. If you're on Telegram, Discord, or wherever you are, wherever you're watching the live stream, submit the question for us. But and we've got a couple of questions. I need to get to one of these here. And the one that submitted the question won the $50 worth of SMTF. Caddy, I think this is her question. It says, is there a minimum amount to deposit to earn interest? And she's talking about smart interest on the platform. And effectively, no, right? But you have to be an accredited investor if you don't live inside the United States on the SmartFi platform. Also for lending, there's some minimums. If you want to take a loan out against your Bitcoin, it's because you want to do a little more dollar cost averaging and buy more Bitcoin, or you want to invest in, who knows, whatever business you want to invest in and utilize the value in your Bitcoin. There's a minimum of $1,000, right? For most people investing, that's not going to be super huge. And we have, we do loans anywhere from, $1,000 to $100 million, right? So we'll do all kinds of different things. There are different structures, but we've done these kind of aggregate, 9-figure loans in marketplaces and done them safely. And but so I want to ask that, or make sure we got to that question. The second part of this kind of closing up here, we've just got a few minutes left, is I think we have a clip for the Crypto for Good for, did we already play that? Paul will have to reach in here and tell me. Just want to make some observations about the time in Guatemala and what we learned. What I learned about cryptocurrencies, had to come all the way to Guatemala to learn that about it. Where we are, at this time with cryptocurrencies, how far it still needs to go to be impactful to other people's lives. We're going to work to improve and make sure that people understand how this works, but also make it simpler, make it safer, make it more understandable. The school that we were working on, was essentially just some outdoor buildings, but there was no light in the classrooms. And they also have obviously a problem with security. So when they first built the school, they bricked up some areas that had bricks that would allow the light to come through, but they had to brick those up because people came in and started stealing things in the school. I don't know what they were stealing, desks maybe, or some things, and we have some pictures of those. But there was no light in the school. So we spent about 3 or 4 days putting light in the schools. There was a water pump that they had installed the previous trip, a few months ago. So that was an awesome experience for me personally. And, it wasn't some giant, massive investment into what we were doing, but we were just down there helping this little village school is in a little town called near El Rosario. And that was an amazing experience, but it taught me something about our business model that still played out to be true even in Guatemala. So it was really interesting. And hopefully, as we keep moving forward with the products, and one thing that was really kind of eye-opening to me too is that almost everybody had a cell phone. So we're going to certainly continue to make that accessible to those people in Guatemala and start to teach them. We've got some things I'm going to work through with another program. I can't announce that yet here, but we're going to start to help people understand what it means to be prosperous and preserve wealth and do these things even from a small village perspective. So that'll be another topic for later. But I also want to get to an article that was printed, this on Cointelegraph, about SmartFi, about crypto for good, but also about our project, what we're doing, and the innovation and how we're also trying to get back to the community. So if you get a chance, go to Cointelegraph and read that about SmartFi. It was great. And I think what we're going to do is we're probably at the end of our time here, Martin. But I just want to say thank you for coming on, taking the time. And I don't know if we mentioned this earlier in the introduction, but Martin is now, when he came on, he's the head of research at SmartFi. Obviously, you can tell he's got a wealth of knowledge and experience and perspective that I don't think, when you get a bunch of techno nerds, bunch of highly competent techno nerds building DeFi projects, what they lack, they might be a bunch of super smart 20-year-old kids, with coding and all these other things, but what they lack is the experience of I don't pay, right? When that comes across and they don't realize that things can go to zero and all these crazy things can happen and the markets can behave, what seems to you irrationally. You take the case of Terra Luna, their stable coin. I'm sure they thought the markets were behaving irrationally, right? But that was the design that they missed in their stablecoin algorithm, that we don't have that because we've seen that before. We've seen all these crazy things happen in the marketplace and it can go to zero. You need to have real world value being created in the DeFi protocol, which we are building some of those. There was another question I saw on there about, hey, what are you guys doing to take this into the DeFi world? Next year, we will have an EVM environment with DeFi and all of these other things that are going on. But it's going to be informed by experiences like Martin's, mine with the commodity markets, the things that we use to design that with. But all that's continuing to go on. We've got some amazing announcements to make later this month. You're not going to want to miss that. And hopefully we can do that here in about 14 days. We'll make these announcements of how we're integrating into the banking system, right? And banking. So that'll be interesting. But again, thank you, Martin, for being on. And maybe you've got one last little bit of wisdom you want to impart before we go out.
No, just one little thing. When you said about the market being illogical, always remember there's an old trader saying that the market can stay illogical a lot longer than you can stay solvent, right? Yeah. So just because it's illogical doesn't mean it's going to end, number one. Number two, I feel we should mention the Queen, God bless her, who died as we were speaking, basically, I think. Does it have an impact on markets or on us every day? No, but, she's been around a long time. Did a good job. Yeah. I was never a great royalist, but it's one of those things that you feel like you need to know it's passing of an era and this, that, and the other. And so, mention it. And just as a person, have we got time for me to tell my story about royalty dying just very quickly? Another old dealing room story. Right? Yeah, we're out of time. Technically, I used to work with this person who was known for being very smart, but sometimes saying stupid things. We all know people like that, right? And when the Queen Mother was very ill, these all of these things would come up, like, all these rumors would come up that the Queen Mother had died, because it didn't make any difference to the value of the currency whatsoever. We all paid attention. And then one day the rumor came across our screen, or the news came across our screen, the Queen Mother has died. And this person, Ruth was her name, who was famous for these things, looked up and said, "What did we do last time she died? Did we buy it or sell it?" That's kind of a funny way to talk about the death of the Queen, but you know what I mean? One of the things that it shows me is, tying this all back to where we started about the irrationality of markets, this, that, and the other. That's such a random reason to buy or sell the thing that not even the person right there in the middle, turning over hundreds of millions of dollars a minute, could actually knew what the implication, if any, of that news was. Yeah. So how do you expect to anticipate moves in the market over a long term? Don't. Dollar cost average into your investments. Be safe. it really is important that you do that if you're going to invest, whether it's in SmartFi or in SMTF, in Bitcoin, whatever. Take it from somebody who's been in the markets 40 years, who's made a living out of them for a long time. Don't second guess it. Average in over time. Find something with a safety element like SMTF, right? Like to the SmartFi community, and do it that way. You'd be way, way better off.
And then you can spend your time doing what you actually like, right? With your hobbies and your family. And all these things.
Exactly. In my case, paying college tuition bills. I love doing that.
Yeah. So thanks, everybody, for watching.
Thank you.
Next week, we will have Amelia Power Gardner on. She is actually a Utah County Commissioner. And when she was in another elected office, I think she was the county clerk. I think I'd have to go back and check. But she implemented blockchain technology for absentee voting for veterans. One of the first people in the country to do that. Also, that's her right there. When she's also on the task force, the Utah Digital Asset Blockchain Task Force. And she also, if I remember correctly, she'll have to tell you the story, but she has, I think she's issued 25,000 marriage certificates on blockchain. So as a woman in crypto, she's been an innovator as an elected official and continues to advocate for this and push this forward in the state of Utah. It's one of the reasons why we love being in Utah, and the crypto is already accepted here. Blockchain technology is being used. You know, we're doing a bunch of these other things here, but thank you, and look forward to Amelia being on, Commissioner Gardner being on next week. But don't forget to like and subscribe. That helps us a ton to get the messaging out. The algorithms, you know, that helps us with the algorithms. So let's, if you can, take a chance to like it, subscribe to the channels. Also check us out on Twitter and Instagram. We're going to be posting things throughout the week. But thanks, everybody, for the opportunity to share some of Martin's wisdom and SmartFi as a project. And we'll see you next week.
Thanks, guys. See you.